Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. Usually this is on Monday evenings, but I was on vacation for about a week, so I didn't want to put off till next week. So we're doing a session here on Wednesday evening this week instead. So welcome. My name is Troy. I'm a Senior Account Manager with AvaTrade. As we get going, let's just do a quick systems check. Type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If you have any issues as we go with your audio or connection or anything, just let me know. Typically, it's on the client side, not on my side, but sometimes I'll lose some sort of audio or something, and usually I see about 30 or 40 messages saying that you can't hear. Okay, so keep in mind, all investments have risk. No one trade is guaranteed to profit. I think we all understand that. But obviously, we all realize that there's a good potential for profit on each and every trade that you do as well, which is why we're all here. It's just about managing your risk in a way that makes sense for you with using stop losses or hedge trades or other methods like on our AvaTrade Go mobile app. You can actually cover risk with protection on trades for a small premium cost. So there are different options to build into your trading strategy for managing risk, but understand that there certainly is risk there with Forex trading, CFD trading, spread betting, etc. As we go through different ideas and strategy concepts and information, keep in mind it's coming from an educational perspective and not meant to be taken as financial advisement. As we get going, also, it's good to go over what is fundamental analysis real quick. And I do see some of your comments asking for some specific things. Certainly we'll go over how to determine where your stop loss would be put and other ideas that I see suggested. What is fundamental analysis? It's basically the news. It's what's happening around the world, which obviously we've all noticed, I'm sure, that as the fundamental news breaks, as the headlines come out, or as the economic reports come out, that moves the market. Usually it moves the market quite predictably even. There are two main types of fundamental analysis that we'll do this evening and in general that exists. One would be regular economic events, which we'll take a look at those announcements that came in today on the economic schedule. What's nice about those is you know what they'll be, you know when they'll be, and you know which asset in general it most likely will affect. It tells you right there on the economic calendar. You can time things out great with those types of announcements. The other type of fundamental news is quite a bit different. We might call those extraordinary economic events, like breaking news about US and China trade negotiations or breaking news about the global pandemic, etc. Things that you just don't know what headlines might come or when they might come, but you know that eventually they will come. One type of headline or another that will shake the market, that will move it. And so we'll go over ideas about kind of trying to ride the wave and find proper entry points for the type of news that we already know, and then also prepare maybe with pending orders for the type of news that might happen that we don't know yet, but that we know could happen. And so both methods have great potential for profit, and when used together with technical analysis to find entry points that might be opportunistic, you really have a great potential for success, okay? So as we go along, if you have questions, you want to give input for others, for me to share with others, please go ahead. Feel free. This is an open dialogue back and forth in the chat box there. So let's take a look then at the economic schedule. What happened today? And what you will see is that there were some positive announcements out of Great Britain, okay? There were some negative announcements out of Europe, more negative than positive, out of the European Union, Germany and Spain specifically here, with retail sales, unemployment numbers coming in worse than expected. And then as we go down, we see the US had a really disappointing announcement on the advanced data payroll, ADP. It's basically a predictive mechanism each week that there's going to be the big non-farm payroll announcement, which is the big jobs report that comes out the first Friday of each month out of the US. It really moves the market on the Friday that those numbers come out, which will be this Friday. The ADP, advanced data payroll analysis, comes out usually the Wednesday before that actual announcement on Friday. So this is a predictive number that it looks like maybe 428,000 jobs were added in the US. And so we'll see on Friday how close that is. It's not always exactly right, that's for sure. But we can see the estimates were that 950,000, nearly a million new jobs were expected to be added, and it came in at 428,000. So you would think that would cause maybe US markets to pull back, okay? We'll take a look and see that that's not the case completely through the day, but maybe partially, okay? When we look at last month's prediction, it was 212,000, okay? Or not the prediction, but the actual numbers, 212,000. So the actual prediction here, okay, the prediction, the ADP numbers came in 212,000. The prediction was way above that, but look at the actual numbers that came in for this ADP analysis. It's almost 100%, or it is over 100% more. It's double what the numbers were last month. So maybe that's why the market didn't crash with these numbers, right? For two reasons. It's a predictive tool. It's not the actual numbers that come out Friday. And the numbers, although didn't meet the expectation, they are more than double what the predictive mechanism showed last month. So it still shows improvement, a ramping up maybe of hiring, okay? Maybe not at the pace they were hoping for, but a ramping up of hiring. So sometimes you have to read through the tea leaves a bit. Other numbers out of the US, positive. And out of Canada, labor productivity, better than expected. We're looking at all of these numbers here, none of them negative out of the US, either came in as expected, written in black, or better than expected. Factory orders, better than expected in terms of increase in factory orders. That shows an improvement, a ramping up of economic activity when there's an increase in factory orders higher than the increase that was expected. So it not only increased, it increased more than expected. Factory orders. Also down here, crude oil inventories. This is a big one. Look how much crude oil inventories dropped by over 9 million barrels. Expected to drop by about 2 million, dropped by over 9 million. What does that typically do to the price of oil if the inventory dropped? What might you expect in the bigger picture now with oil prices if the amount of oil in inventory is lowered? It means it's getting used up faster. There's not as much supply. The inventory's dropped. What does that usually do to price of anything if there's less of it available? Yeah, typically, Albert, I'm with you. Typically, that helps drive price up. Now, I will tell you that I've watched inventories for a long time. These numbers come out, and many, many times, the movement initially moves the opposite of what you think the economic numbers should do. So the inventory numbers dropped, and you would think, price should go up. Guess what happened today? The price initially pulled down. So what does that do for our entry point if you believe the bigger picture with an increased utilization of oil, lowered inventories happening? That maybe gives you an opportunistic entry point to go in the direction that these numbers say oil should go, which is probably up based on supply and demand idea here, okay? And with factory orders ramping up, with more hiring, double the expectation of last month's numbers to this month, maybe that also could help reverse oil's drop today. So just some ideas in terms of fundamental analysis, what direction you might prefer to trade. Maybe you prefer to go against the euro with these numbers today, with the pound with these numbers, better than expected out of Great Britain. And in terms of the USD with good factory numbers and other numbers looking solid, we kind of get an idea of which way the wind maybe is blowing. If we look at the headlines, U.S. firms add fewer jobs than expected. We just looked at that. According to the advanced data, they expected nearly 1 million. It came in over 400,000, but not anywhere near 1 million, but was still better than last month's, right? Expectation. So it was shrugged off. If we go to the next headline, U.S. private payrolls miss expectations, point to lowering labor market recovery. That was earlier in the day, right? And then we see Wall Street moves higher, shrugging off the advanced data payroll disappointment. That's because really it had a silver lining. It's still a pretty large increase in jobs. In any normal circumstance, 200,000 jobs added is a good number. We're over 400,000 jobs added in the US. Okay, it missed expectations, but really it was better than last month's predictions by over 100%. So you can see how they can shrug off the quote unquote disappointing ADP numbers, because actually they were pretty good numbers still. And then along with that, factory orders going up by more than expected, other positive numbers helped drive things up as well, including the positive announcements out of Great Britain. And then we look at oil stockpiles plunged by 9.3 million. We just looked at that. It's in the headlines. And then we look here. The futures are green. The markets are all green that opened. We can see it here, and we see volatility is down. That usually points to positive sentiment when volatility is down. The VIX volatility index, referred to as the fear index, it's down slightly. Not much, but it's down. Certainly didn't go flying up with those job number expectations that came in. So the USD is strengthening and the US markets are rising. And usually that helps pull up the DAX, the Nikkei, right? The other large indices and stocks around the world as well, because it's such a global marketplace anymore. All right, so now as we get on the charts, we have an idea of what direction we might prefer to trade. Positive sentiment, better than expected numbers in a lot of this area. Oil looks like it has reason maybe to climb. And so now we look for entry points, technically speaking, on the charts that look opportunistic. Okay, type okay if you're with me. All right, thank you. I also just do a check-in if nobody's been typing any questions for a while, just to make sure my audio is still running. Okay, so let's get on my demo account. We'll look at the live movements. You're more than welcome to log in through your mobiles, whatever, or if you have two screens, to have your live account logged in. Any strategies, concepts where you like the information, you understand it, by all means, you can choose to trade. Not because I'm telling you to, but because you understand the information and you're trading because you think it makes sense, okay? Like I said in the beginning, I can't advise your trades, but I can show you the information and you certainly can make up your own mind. Okay, so S&P 500 climbing pretty much all day. These are, let's go to 30-minute candles. Here we go. And look, it just broke a high point. You see that? That's a breakthrough candle of the all-time high. We just reached an all-time high in the S&P 500. We just watched it happen. Didn't we just say positive sentiment? You could buy on this now, put your stop loss below this breakthrough point right here, right? So I can say, let me buy, and let me put my stop loss just below this breakthrough, which should act as support now. Anytime there's a high point and it reaches that high point and breaks through, that last high point becomes what we would call a support level. So now my stop loss could be down here at like 35.50. Okay, so I can get in, I can say modify or delete, stop loss 35.49, let's say. And so I'm not risking much, depending on trade size and balance, right? A small percent exposure. There's my stop loss line now. So I'm only risking a small amount. It's at an all-time high. It has positive sentiment today. It's no surprise it broke that resistance. And had we started the webinar an hour ago or 2 hours ago, we'd have traded up from this support level down here, with the positive sentiment. We see this was resistance. And some of you are asking how to find support levels, resistance levels. So this was resistance in an uptrend, right? In an uptrend. And once it broke that little resistance where it pushed back, now that's a breakthrough. Now you buy. So there's your first opportunity to buy. When it pulled back to that support level down here, this old resistance becomes support, okay? Right in this range right here, okay? Resistance, breakthrough. So here's your support. When it came back down to this area, that's the spot to buy, and up it went. And you'd have been in profit again already, okay? We got in a little later, or I did in the simulation. I'm demonstrating a breakthrough trade, meaning it broke this resistance just like it did back here where it broke through and then it rose further. So now it formed resistance, it broke through. So you expect potentially that it could rise further before it would break back down below this broken support level here. So this is a classic market trade because we happen to be there right when it happened. Okay, and we see I'm up $100. So if I'm scalping, I can just say, okay, let me close. Okay, I just made $60. Or if it's a longer term move, you wait it out. Okay, there are a lot of what we call scalping traders that go in and out really quick, and that's a way to do it. When it breaks through a resistance level, you tend to have momentum that carries at least for a little bit. Look, it's still climbing. Okay, you also could stay with it longer term. It's up to you. What kind of pending order could we have put if, let's say, we started when the movement was still down here? And I say, okay, I know the fundamental news says major indices should rise. And I say, okay, I want to confirm that it breaks this high point before I get in. I want confirmation of an uptrend because I'm afraid it might hit this resistance and push back down like it did here. But I'm not trading down from the resistance because the fundamental news says it should go up. So I'm combining the idea that I only want to trade up because of the positive sentiment. And then I'm combining that idea with a technical strategy that I'll wait for the breakthrough before I buy. And so what kind of pending order could I have put that as soon as it broke this high point, I could have had a pending order waiting right here to buy automatically on its own, so you don't have to sit and watch it. What do we call that kind of pending order that if when the price was down here, you could have programmed it to buy from a higher point? Buy as soon as it broke this high point. Byron, you're first. Correct. Buy stop. A buy stop pending order. How would we have done that? You wouldn't do it now because it already broke through. But if you went back in time and you saw all those positive headlines, you saw positive sentiment, you saw the fear index was down, you say, wow, it should keep rising. It might go to a new high today. So then you say, okay, I see it pulled back from this high. The movement's down here maybe when you're looking. You say, okay, let me put a buy stop, pending order. I click pending order. I pick type. Buy stop, buys from a higher point, which I know can be counterintuitive, meaning you might say, why would I buy from a higher point? Wouldn't I want to buy from a lower point? In some circumstances, yes. Like as it was dropping to this support level, I would have put a buy limit, which buys from a lower point. Why would I buy as it's dropping? Because I know the sentiment was positive. So now I can catch an opportunistic entry point down here near this support area here. And my stop loss would have been down here. If it breaks below this support level, then I give up. Boom, I would have already profited. Okay, you missed it. You didn't buy with a buy limit. Now you say, rather than buying from the support level, I still want to buy because there's positive sentiment, but I only want to buy if it confirms an uptrend. And that's what the buy stop does. It waits for a breakthrough on the way up, showing strong momentum. You're giving up some of the distance, meaning getting in at a worse price, but you're getting in at that price because it confirmed a breakthrough, an uptrend. And so that's the buy stop idea. Up here, buy limit would be down off this support level down here when it was on its way down. Okay, all right, so let's take a look then at gold. And I guess I could have finished that example of a buy stop. Pending order, buy stop, you just put the price here. The at price would have been somewhere up here. And as soon as it broke through that, hit that price that you programmed here, it would have bought. Very simple. Now what we could do with this, what if it pulls back down to this support level here? So if it pulls back down to 35.55, okay, buy limit, buy from a lower point. 35.55, place. Okay, now if it comes back down and challenges this support level, I'll buy from this, what was resistance. When it breaks through, it becomes support theoretically. If it pulls back down, I expect it to bounce up from that. And so it'll buy if it hits this price now. That's a buy limit. And my stop loss I would put just below that. If it breaks below this support level right here, then it might drop to the next one. So then I'll have my stop loss right here and get out with a small risk. So at 35.49, 35.49, that's my stop loss. Okay, so if it pulls back, I'm ready to get an opportunistic entry point on a day that I think it should bounce up off a support level rather than break back below it. That's not to say you couldn't prepare also a sell stop below it. If it does break it and you hit your stop loss on the buy, then you could sell. What kind of fundamental news could cause it to break that support and go flying back down? Didn't we say there's two types? The known fundamental news and the unknown, right? So I'm preparing. I already profited on the known. I bought on this breakthrough. I already put $60 in my pocket, right? Now I say, if it pulls back down, I'll buy again with the news that I know. What kind of pending order could I prepare below this support level that if it does break it, I sell? Because there could be that unexpected fundamental news, the extraordinary economic news. Maybe a headline comes out that says trade war heating up between US and China. What if that headline hits? All of a sudden the markets could crash. So because we don't know when that might occur, could occur at any time. Some fundamental news breaks that's completely unexpected. So right now we traded in the direction that we know, and I prepared a pending order for the direction that we know, that if it pulls back, I prefer to buy. I could easily still be in my market move buying on this, okay? And at the same time, I can prepare a sell stop. That's exactly right, Albert. I can prepare my sell stop just in case the news turns. But I'm not preparing it at a spot that doesn't make sense. I'm preparing it below a support level that it just broke through. If it plows back below that support level, something happened. There's a reversal of news potentially. So my sell stop I might put down here at, let's say, 35.48. Then I know it truly broke this support and it might be on its way down. Okay, so, and by the way, you can put any price you want, right? I'm just giving you examples here. 35.48 and place. Okay, if it came down and hit this price, then I sell and I might take profit at the first support level. And my stop loss is just back above this resistance level / support level. If it goes back above, then it was a false move and I want to get out. 35.57 would be my stop loss maybe on that pending order. So 35.57, modify. There, stop loss is if it goes back above. I'm only risking a little bit to make as much or more, okay? And by the way, you can have the opposite strategy. You can put your stop loss further away and take a quick profit like I did on that scalp move. I took that profit and that's it, right? I took less profit than where I put my stop loss because then I'll probably win more often because I'm not being greedy. I'm getting in and out. But we see this continues to go in the direction of expectation. Why is it going up after we already said we think it'll go up? The power of fundamental news, the power of sentiment. That's what we're watching. Until something changes the sentiment, which could happen at any time, we've got a wave that's rolling here. Okay? All right. So you get the idea here with stop losses, support, reversal, preparing for a reversal with another trade, and you might get out of the first trade just like that. based on technicals as well. Now, let's say you are still in on this. Let's pretend I didn't close that trade in profit, that I was waiting for a further climb. How do you know when to get out? So we need to look at larger candles, 1 hour, 4 hour. We're at an all-time high, so there's no resistance point, right? I could put 1 month candles and we're not going to see a resistance point where it went up and dropped. We're not going to see a point on the chart that shows it hit and dropped, and say, okay, if it gets near there, I'll take profit. It doesn't exist. We're at all-time highs. So in a situation like this where you don't have a resistance level because you're at all-time highs, maybe you put a trailing stop. Okay, or maybe you just say, I want to make X amount. I want a certain percent gain on the account. And if I make X percent, then I close it, or I do a partial close. Okay, and I mentioned some terms there that maybe I should show you how to do that. So let's say I already had this trade running, and it'll probably pull back negative now because I'm getting in not at the best time. But okay, so at least temporarily, I expect it may pull back the wrong way now. But the point is I want to show you how to do a partial close. So let's say I'm in on a trade, and let's say it's in profit, and I like the profit. I go to modify, and I change it to market execution. And now I say, okay, I don't want to close the whole thing because maybe I believe the movement will continue, but I want to preserve some of my profit and lower my exposure, because the further it goes up in this example, the more likely it is to pull back. So maybe I want to take some profit before that happens, but I don't want to get out completely maybe. So now I change the volume to the amount I want to close. So let's say I want to close 0.75 because let's pretend I'm in a nice profit. And I'm saying, okay, I want to preserve most of my profit. So I go 0.75. Now you see down here where it says close. It has my order number, and it says I'm closing 0.75, the amount I put here. So that's how you do a partial close. You can close any amount of that one lot position that you want, okay? And when I close it, because I'm closing 75% of my one lot, then whatever positive or negative that was showing, I'm putting that amount of P&L into my balance, and the rest keeps running. Okay, that's how you do a partial close. Let's say I wanted to put a trailing stop now because there's no resistance level. It's at an all-time high. And I say, okay, how much, where do I stop? Maybe I say, let it run as far as it will, and I'll put a trailing stop. If it pulls back the distance of the trailing stop from whatever high water mark it hits, then it'll close automatically, preserving the rest of the profit. So if it keeps climbing and my trailing stop is 100 points back, it'll stay open forever. If it pulls back 80 points and then climbs more, it stays open. If it goes to a new all-time high, pulls back 90 points and then climbs, it still didn't hit my trailing stop. If at any point it pulls back the distance of the trailing stop from the high water mark that it hit, then it hits the trailing stop. Trailing stop keeps following the all-time high at that distance back that you program. If it ever pulls back that distance, it closes. Otherwise, it just lets it stay open and keep climbing and climbing. Okay, so right click, you see trailing stop. It has predetermined number of points. And by the way, the points go to the last decimal. So 100 points is not that far back, right? So you might pick 800 points or 1,000 points. Okay, so 800 points is 8 whole numbers here. $8 on the price, 800, because it counts both decimals. So if that's what I wanted, or I wanted a custom, I want to go back 10 whole numbers for a trailing stop, then I put 1,000. Okay, now I've got a trailing stop. It does not show the trailing stop on the chart, but it's there. If you log out, an important note about trailing stops, if you log out, if you lose internet connection, if you are not connected anymore, the trailing stop disappears. Okay, the trailing stop will disappear, and you should probably make sure you have a backup trailing, a hard trailing stop there as well. So I might open this and say, okay, I've got a trailing stop, but in case I lose internet signal, I'll put a standard stop loss as well. I'll just adjust it up right now to preserve profit maybe to my entry point so that I won't lose on it. And if it goes higher and higher, my trailing stops following should stop it before it ever gets down to this stop loss. But if I lose connection, I have a backup stop loss. Okay. I'm not going to actually put it, but you could. Okay. And you see this is moving again in positive direction. Had I left the whole thing open, we'd be in a large profit again. And I could have scalped it already. Okay. There's another $14. If I left the whole one lot open, it would have been another $50 or $60 profit. Okay. So we see riding the wave. Riding the wave. That's the idea of fundamental news. And then at specific spots, why is this candle so much bigger than these ones? Because it broke the resistance level. And when it broke it, many times you get what's called a breakthrough candle, a much larger candle than prior candles. Because it takes momentum to break the resistance level. To break to an all-time high, it took momentum. And then you see that momentum carry out many times with continued movement in that direction. Not always, but many times. Any questions, comments, points about what we've gone over? How to apply the fundamental news, both known and prepare for unknown. Okay, let's take a look at gold. There's been an request to look at gold, so let's take a look at that. Oh, you know what? Before we do that, I want to show you oil. Just because I'm hoping it's still down, it was at a really opportunistic entry point before we started the webinar. And it's starting to bounce a little. I can see, we see it bouncing up here. Crude oil inventories came in. Remember at the start, I said many times when the crude oil inventories show a decrease and you expect, well, less inventory, the price should go up. Boom, the movement goes the opposite. It could be game playing. It could be large investors just moving the market with large amounts of investment, knowing that they're going to stop people out who thought it should go the other way. Whatever the case may be, a lot of times it pays to be patient after crude oil inventories and just wait for the smoke to clear. Then after things calm down, look for your price levels and trade in the direction that you believe the fundamental news and the bigger picture should move things. From my experience with oil, patience is key after oil inventory reports. Okay, so the inventory reports show a decrease in inventory, meaning, hey, prices maybe fundamentally speaking, supply and demand should go up. Then we say, wow, it dropped. So look at the opportunistic entry point. Here's a major support level on the 4-hour candles. Support. It hit and bounced. Support. It hit and bounced. Look where it got close to before it started bouncing. So I might say, okay, fundamentals say buy on oil. So there I go, I buy. Why did I buy now? 2 reasons. Fundamental news says oil should go up, positive momentum in the economy, decreased inventories, and I have an opportunistic drop, and it's just above a support level that the last 2 times it hit, it bounced significantly. Okay, so now I put my stop loss down here, right? Just below the support. If it breaks the support, okay, something's going on we don't know about. So let's put, as this example, maybe a stop loss at 41.3. That means I'm risking only $0.50 per barrel. So from my entry, approximately. So modify, crude oil, position, stop loss 41.2, 41.3, something like that. Okay, there's my stop loss just below this support level here. And if I want to be more patient, I could say, you know what? Even if it breaks that support level, I'll move down below the next support level, which is right here. Resistance, support. Then the support level moved up to here, bounce, bounce. So if you want to be more patient with this move, let's say it's not a scalp move. Let's give an example of a more patient move. So I go below 2 support levels then. 2 support levels would have to get broken before I give up because I'm doing more of a longer term move with this example. So it would have to break this support level and this one for me to give up. And it's a longer term move. So I'm looking for it to come up to this resistance level up here. resistance, 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 about 43.4. So let me put a take profit on oil. Take profit 43.4. Okay. So now my potential profit is double or a little bit more than double than what I'm risking. Okay. Now, you don't have to expose a lot to put your stop loss below 2 support levels. I know it's further away because we went below 2 support levels. So just take a smaller trade if putting your stop loss below 2 support levels causes you to expose more risk than you want. So take a smaller trade then. No problem. You lower the potential profit, but you also increase your ability to be patient. In this example, why are we buying? Because the fundamental news points in that direction. And the technical entry point seems opportunistic. It just dropped a bunch when we think it should go up. So why not buy from the support level, limit your risk, and go after it? Okay? By all means, if you think this should drop, sell. Like I said, I'm not here to be a financial advisor, but it's an example of how to apply fundamental news along with technical entry points, trading in the direction that you believe the wind should be blowing. That hopefully in the end helps you win a little bit more than you lose, but certainly will not make you win every trade, right? Otherwise, the market couldn't keep going. If everybody was winning all the time on every trade, the end liquidity providers would just say, hey, we keep paying and we never win because we're all winning, right? So it's got to be a competitive marketplace. It's not easy to trade. You don't win every time, but if you trade smart and you're not what more than half of traders are, which are gamblers, just throwing huge trade sizes, trading on just emotion, jumping in at any spot, doubling up, not watching their exposure percentages. These are the people who lose more often and blow accounts. If you're following a risk management strategy, if you're limiting exposure to an amount that makes sense to you, if you're going with the fundamental news and technical along with it, hopefully you can improve your win percentage and be amongst that 20%, 25% of traders that profit long term. Okay, and that just happens to be about the percent of traders that take things seriously, manage things like a business, manage exposures, etc. Okay, and that's why you're all here, because you want to be part of that percent of people that does that and doesn't just act on emotion all the time when you're trading. Any questions, comments before we wrap things up here? Yes, gold. Let's look at gold. Last asset we'll look at this evening. We see gold dropping. Makes sense. Positive sentiment today. Gold's been dropping. So we say that's expected. Safe haven currency. What could you have done today? Not currency, but safe haven asset. Usually people start selling gold when they buy into the stocks, the more risky assets, the stock market, the indices, what they call equities. People buy into those when fear drops. And usually then that means they're selling gold. Not always, but many times. So you could have had a sell stop below this support level today. Support, support, support. A sell stop when you saw that there was positive sentiment, you could have had a sell stop ready to trade if it broke this support level. Boom, it broke. And remember we talked about the size of a breakthrough candle? Look at this. Look at the drop in just a 1 hour period of time. Look how much gold dropped. As soon as it broke this support level, your sell stop would have kicked in here and you'd be in huge profit. So gold was very predictable today. It went the direction the fundamental news would expect it to go. That pending order back there, had you set one up just a few hours back, you're in huge profit. Now the question is, what do I do now? You're kind of in the middle of the movement here. The next support level is down here. So it certainly could push to the next support level. You could have a pending order just waiting to buy if it reaches this support level down here. You could put a buy limit and trust this support level, put your stop loss below it, okay? And really the support level is down about here. okay, down a bit lower. So it could push down to this support level where it hit and bounced, right? If it drops to here, that might be an opportunistic spot to buy from. So you could put a pending buy limit from down here. Is it going to drop all the way down there? No guarantee, right? So I like the pending order here to buy off the support level down there because there is still a global pandemic, right? It's still there. So at some point, the bulls will kick in, the buyers will kick in. If gold drops enough, if it hits an important price level, you could see gold shoot back up. This could be that price. You could prepare a buy limit at this support level down here, at this price level, which is around 1915, 1916. You pick your spot, and you could have a limited risk stop loss just below that support with a huge potential profit if it climbs back up to one of the higher resistance levels. So I like that type of setup here to bank on gold eventually retracing itself because we are in a global pandemic in the bigger fundamental news picture. Okay, so it looks like there was an easy trade earlier today that you could have done, and it looks like a really large potential bounce could occur if it reaches this support level. Obviously, no guarantee, right? Great. We've got time for one more asset. Anybody? Okay, someone's asking, what would you do if you're going to trade on gold right now? Okay, first of all, if I'm scalping, if I'm looking at gold right now, I'm going to the smaller candles. I'm going to 5 minute, okay? Then we'll look at silver and Nasdaq real quick and be done. Okay, gold. You see here it found support, right? Support, support, support. I zoomed in on gold in this downtrend. So it found support and then broke it again. Now it pulled back up to this little support level. You could put a pending order that if it breaks this little support level here, you buy, okay? Or you could just say, here's what I'm doing. I'm going to buy on gold now. This is a scalp move now. This is a scalp move. So I see a small reversal occurring. So I bought just now, okay? If it drops below the low point today, which is not that far down, if it drops below this little support level right here, support, support, support. If it drops below that, I'm out. This is a scalp move, limited risk, going after a short reversal here that could potentially happen. So because I see hesitation in the drop here, looks like a potential, at least short-term pullback. So now I'm putting my stop loss at 1931.5. Okay, so gold, stop loss 1931.5. Okay, so if it breaks, we go to 15-minute candles. Here's my stop loss. If it breaks the low point of today, that means it's continuing the downtrend, then I'm out. That's it. I'm going against the fundamental news right now. So I'm not going to be very patient. If it's going the wrong way, I'm going to get out because this is a fundamental news webinar. That's the idea. If we're going against the fundamental news, you got to limit the risk in some way unless you want unlimited loss potential on your account. So stop loss just below the first support level, my take profit, maybe because I'm scalping, I'm looking at the first resistance level. So 1944. Modify 1944 for a take profit. There it is. That's a scalp move in the direction of the pullback, not in the direction of the fundamental news. This is more of a technical move. And many times pure technical moves can work out, especially after such a large drop. You can see pullbacks and just trade technically too. But usually if you're going against the fundamental news, you'll find maybe better luck with short-term moves against the fundamental news direction, okay? Short pullbacks. You can scalp some profits. Look, gold's in profit now, $15, $20, okay? So I can just say, okay, boom, took my profit. I just made a profit on a technical pullback that looked obvious that it might continue some. Took my profit, I'm out. That's scalping, okay? The bigger picture move, you might put a sell stop below this low point because the downtrend is big. It's a strong downtrend. This is a short pullback right now. You could prepare a sell stop just below this low point. If it breaks that low point, it could be headed down to this support level that we drew way down here around 1912, 1914. Okay. All right. So let's quick look. Silver's probably moving similar to gold. We won't look at it. Sorry, but we've got to limit things here. Let's look at Nasdaq. Nasdaq's been more bullish than the other major indices because of the tech stocks doing well through the pandemic. So let's look at Nasdaq. I'm almost certain it also went to all-time highs. I actually didn't even have time to look at it today after my vacation, and it did. Went to another all-time high, pulled back, and look at the bounce. Okay, so very similar. Had you done exactly what we said on the S&P 500 that we looked at, there's the support level, resistance, breakthrough, support. It came back down on the pullback. If you bought from this support in the direction of the fundamental news, look at your profit, right? So the power of the fundamental news coming through very strong today. It's a very good fundamental trading day and technical day. Support levels are holding well in the direction that you would expect with the fundamental news here. All right, everybody, thank you for joining. If you want to watch any of the past webinars or this one again, by tomorrow, this one will be uploaded to our YouTube channel, and all the past webinars are there as well. Okay, we'll be back at it again this Friday. So day after tomorrow, we'll have another webinar, 1 p.m. London time. Okay. All right, until then, good luck with your trading. Thank you for attending.